Hello everyone and welcome to today's morning report on Monday the 9th of May with me, Rich Perry, market analyst at Tech Markets. We've got a pretty reasonable looking open to the European trading session. The equity markets are quite strongly higher actually, 0.7% on FTSE's, 1.6% higher on the DAX. In terms of what has driven this move, it's interesting because we had the Chinese trade data out over the weekend and it wasn't especially positive at all. Both imports and exports came in below expectations and both falling again. Now the fact that the Chinese FX reserves were sort of stable may have helped to sort of reduce the impact of that. And generally, what we're seeing in markets today is, as I said, positivity, and that is also being driven by, I think, the decent rebound on the oil price as well. Oil price jumping around about 1.5–2% over in the early moves, and that is certainly helping to stabilise equity markets. You've got also the dollar, which is so let me just show you the oil price increase. Just sort of finding support around that 43.20 level on WTI and pulling higher again, and the dollar, which is continuing to make its recovery. Now we had that payrolls report out on Friday, which is pretty mixed really. The average hourly earnings improvement is the main bullish takeaway or main hawkish takeaway from that report, but the headline numbers were weaker, and also you had negative revisions as well. So it's a fairly mixed report ultimately, but certainly the dollar has managed to sort of regain a bit of poise after sort of that volatility. And what we're seeing also is the Japanese yen under some corrective pressure as this Japanese yen under corrective pressure as this improvement in risk appetite has sort of come through the markets today. So that is the main sort of mover on the FX markets. The dollar yen has rallied. And it's interesting because there's some key levels being tested there, and I'll talk about that in my chart appraisal in a bit. But we're seeing a fairly decent rally, as I said, on the dollar and also the equity markets today. So my chart of the day, because I'll just say that there's no real economic data today, but there is Chinese inflation out overnight, so maybe watch out for that early tomorrow morning. But in terms of today, there's nothing really on the agenda. So my chart of the day is the Kiwi dollar. And we've seen this Kiwi dollar correction once again back towards that uptrend channel support. And the interesting thing I want to look at here is this. I sort of focused on this possibility of a head and shoulders top a couple of weeks ago. That sort of rallied, and then it's now come back again, and it looks like this is a big double top now. So what we're looking out for is the support at 68.03, which was that reaction low from the 27th. If that is broken, then that would complete the top. Not quite done it yet. Friday didn't quite do it, and today opened lower, but again sort of found a bit of support, but it hasn't been broken yet. So around about 68 figure, you'd probably say. And if you saw a close below that figure, that would be negative. But also look at the fact that this is sort of back to the bottom of the trend channel. Look at the RSI, which is back at 45, which tends to be around about where this sort of bulls come back into support. But look at the stochastics here, sort of dropping back to the lowest since late January. The MACD lines have started to cross and turn lower, so the pressure is now coming on this uptrend channel, and you would certainly question whether this is going to continue as an uptrend channel, and that big double top pattern is very close to completing. If you saw a breakdown of it, yeah, I suppose you could sort of measure 70.50 back down to 68 figures, so that's like 250 ticks of downside. So that would sort of project it back to sort of 65.50 area, and you'd certainly see this. You'd say that these sort of lows from February, March would certainly come back into play if that were to be seen. So we're seeing a bit of a questioning of the bull control here on this Kiwi dollar chart now, and there is certainly questioning as to whether the correction is going to continue. So certainly in the last few days that the lower highs and lower lows continues again today. Reaction high 68.50 area. That was the payrolls Friday spike, 68.80. but certainly that continuation of lower highs, lower lows. Negative configuration on momentum indicators on the hourly chart as well, so rallies are being seen as a chance to sell. It certainly looks like we're going to get further pressure on that 68 figure level. So I wish you good luck in your trading today on the on the Kiwi dollar, and I will speak to you later. Thank you.